The Bank of England cut its benchmark interest rate by a quarter point to 4.75% on Thursday. Governor Andrew Bailey joined Bloomberg's Francine Lacqua shortly after the decision to discuss.
Governor, when you look at what the market is expecting, does gradual mean quarterly in terms of interest rate cuts?
Pass downwards, I think. There are a lot of uncertainties out there, both in the world and there's domestic uncertainties as well. So we've emphasized the word gradual again because we're going to have to take account of how those uncertainties play through. I'm not really in a position, any of us are in a position to say, well, gradual means every so often. That is not a judgment that we make.
But it's a judgment that the markets are making. So if you take away any major shocks, does it seem right?
Well, I think the markets have made that judgment. I think it's a reasonable reflection of the forecast that we've published today, by the way, but which is, by the way, conditioned on the market curve. So it's a reasonable sort of reflection of that judgment that we think inflation is going to come back to target sustainably within the sort of horizon that we look at.
Governor, the Chancellor said she spoke to you at the IMF, also about the budget and some of the things that were coming up. Did you warn her of market volatility or what the market would do?
Well, we talked at the IMF about, I think the Chancellor said, we talked about the IMF about her evolving thinking about the budget and her evolving thinking about the fiscal rules. We have, by the way, we have a very regular dialogue. I'm on my 6th Chancellor since I was appointed, 5th since I started, and with all of them, we have a very regular dialogue. So Chancellor and I do that. So we talked in Washington about her evolving thinking about the budget, about fiscal rules, and I think the Chancellor said, we talked last week about markets. She asked me for my assessment of markets. As the Bank of England is, we provide the Treasury with our assessment because it's obviously something that we're very close to. I'm very, very open and willing to provide that assessment. So yes, we talked through the assessment of markets.
So, but this was before the event. So was the market reaction expected on your side?
Well, we both before and during, actually. So look, I think that if you go back to the beginning of last week, our assessment of sterling rates markets was that at the shorter end they were sort of positioned long for interest rates to go down further than was expected. I think that obviously changed during the week. It wasn't surprising to me, therefore, that there was a closing out of positions, and probably stop orders were being hit. That closing out needed to take place. I think it took place in an orderly fashion. We weren't seeing disorder in the markets. And by the way, I think by Friday afternoon post non-farm payrolls, the dominating event in markets was expectation of the US election, not the UK budget.
Do you think the Chancellor was expecting markets to behave that way?
Well, I think this was obviously a big budget, as the Chancellor herself said. So I think it's reasonable to expect that markets will respond to it. I mean, they knew some things. They didn't know, they didn't know the precise form of it until it was delivered by the Chancellor in Parliament. So I think it was entirely appropriate to have some reaction in markets. But the point is, it's been an orderly reaction. Markets move. We should expect markets to move. It's only when they become disorderly that we should, be concerned in that sense.
Governor, I know you're very reluctant to talk, what possible trade wars or tariffs from the U.S. would look like on the economy, but would they be inflationary or would they reduce growth?
Well, we don't know the answer to that question. I think, what I will say is, look, the UK is a very open economy. So obviously this area matters. The Chancellor has said yesterday and today, quite rightly, and I will join her in this, that she will make the case for open markets and free trade. And I will strongly support her in this because I'm a very strong supporter of free trade. I think you would expect the UK to do that. We have a very proud history of free trade in this country. We will no doubt, say our piece and make our case. But we'll see. I think it's important just to say, look, let the new US administration get into office. We will work with them. I've worked with a lot of US administrators over my career. We will work with the next US administration just as we do with the current one, and we did with the previous Trump administration, by the way. I expect constructive relations, and we will have a good dialogue.
But are you expecting a more fragmented world, and what does that mean for central bank policy?
Well, I worry about a more fragmented world in a more general sense. I'm not saying this is entirely due to the US administration, because it clearly isn't. There's a lot of things going on in the world which are A, very tragic, and B, are a risk to the fragmentation of the world economy. And the fragmentation of the world economy is not a good thing, clearly.
Governor, when you look at the NICs basically that came in the budget, how do you expect that to play in wages, in inflation, in revenue for a lot of businesses?
So I think There are a number of channels through which this can come. And by the way, they're not mutually exclusive. And by the way, they don't need to be constant. They won't be constant over time either. So it can clearly come through higher prices. It could come through lower wages. It could come through a lower level of employment. It could come through lower profit margins. It could come through increased productivity. And it could come through all of those. We've made a very sort of frankly cautious and almost slightly neutral assumption and today because we want to see how this plays out. Our agents will be out there asking businesses. So we've sort of assumed a mixture, frankly, of some wage effects and some price effects. I think over time, if you look at past events, you would expect probably some initial impact on profit margins because it's not always easy for firms to adjust, but then they do naturally tend to rebuild margins over time. So let's say there's both a time profile and a sort of across the section profile. So we'll see.
Governor, there's also going to be a lot more bond issuance around the world, the UK, the US. Does that automatically, mean that there's going to be a premium? Is it going to be difficult to sell all of these bonds?
Well, I think we'll have to observe that. I would say so far, I would observe. I mean, we have seen increased bond issuance actually, both by the way, both private and public actually. So let's say that. And I think markets have absorbed it well, but I think we have to watch. We do have to watch this very carefully, clearly.
I think when Bloomberg spoke to Donald Trump a couple of weeks ago, he said that Jay Powell has the easiest job in the world because he doesn't really show up at work, he thought, and it was a coin flip every month to what interest rates do. Do you feel like you have an easy job?
Well, actually, I do come to work 5 days a week. I also do work at weekends. I travel a lot. I work in, quite hard. So I probably would beg to differ on that point. I think, by the way, no doubt presidents of the US work enormously hard, by the way, so I don't in any sense want to take away from that. But the work ethic among central bank governors and central bankers is, in my experience, pretty good one and pretty hard one.
That was Bank of England Governor Andrew Bailey speaking with Bloomberg's Francine Lacqua.